Alright folks, let's talk about what's happening in the silver market right now, because honestly, it's absolute chaos, and I mean that in the most entertaining way possible. So, picture this. Late January 2026, silver prices are doing their best impression of a cliff diver, dropping from over $121 an ounce down to around $72 in what experts are calling an unprecedented crash. Now, you'd think when prices tank like that, people would run away screaming, right? Wrong. Completely wrong. Instead, everyone and their grandmother decided this was the buying opportunity of a lifetime, and they all hit the buy button at exactly the same time. Major bullion dealers like SD Bullion reported taking a month's worth of orders in a single day. One day. Let that sink in. Their shipping timelines went from a reasonable couple of days to nearly 10 business days, and that was before the big crash. After January 31st, when paper silver really took the plunge, demand went completely bonkers. These dealers are hiring staff like they're opening a new Amazon warehouse just to keep up. Now here's where it gets really interesting. The mints that produce silver coins, the American Silver Eagles, Canadian Maple Leafs, all those pretty government-issued coins, they're completely overwhelmed. Delivery times have exploded from a normal 2 to 3 weeks to 8 to 10 weeks as of early February, and dealers expect it to get even worse. There are rumors floating around that mint allocations for February are already being slashed, meaning dealers might only get a fraction of what they ordered. It's like trying to get concert tickets for the hottest show in town, except the concert is silver bars and the fans are very financially motivated. The American Silver Eagle situation is particularly spicy. When those go on allocation, meaning the mint literally can't produce enough to meet demand, it creates this domino effect across the entire physical silver market. Private mint rounds, generic bars, everything gets tighter because people who can't get eagles just buy whatever silver they can find. But wait, there's more. And this is the wild part. While paper silver prices were crashing on futures exchanges, physical silver was flying off the shelves. The two markets basically split into parallel universes. It's like if movie tickets got cheaper but somehow theaters were more sold out than ever. This disconnect happened because paper markets trade way more silver than actually exists in deliverable form, kind of like how airlines overbook flights, except with shiny metal. On the institutional side, silver ETFs saw 15.7 million ounces of inflows in November 2025 alone, the biggest monthly inflow since July. And retail traders? They've been buying silver ETFs faster than tech stocks in late January, which is saying something because retail traders usually love their tech plays. Silver mining stocks like Hecla and Kerr Mining shot into the top 50 most actively traded stocks. The really fascinating layer here is industrial demand. Big companies buying large silver bars for actual industrial use. We're talking solar panels, electric vehicles, AI data centers. They're placing massive urgent orders regardless of price. They don't care if silver is at $70 or $120, they need the physical metal for production. These aren't speculators hoping to flip it next week, these are factories that will grind operations to a halt without silver. So, they're competing with retail investors, coin collectors, and everyone else trying to grab physical metal. Dealers are basically telling customers, yes, we'll lock in your price, but don't call us asking where your order is for a while, because the line is long and it's not getting shorter. The physical market is functioning, technically, but it's like a restaurant that's still serving food while the kitchen is on fire. Things are moving, just very differently than normal. The sovereign mints are reporting higher production costs, frequent shortages, and wait times that would make a DMV jealous. And remember, industrial demand accounts for over half of all global silver consumption, so this isn't just investors hoarding coins, it's real economic demand from businesses that need silver to function. So, what does all this mean? Well, we've got a market where paper prices say one thing, physical availability says something completely different, mints can't keep up, dealers are hiring like crazy, and both retail investors and industrial buyers are competing for the same shrinking pool of available metal. It's a supply chain breakdown meeting a demand surge meeting a price crash, all at the same time. The silver market has essentially divided into two worlds, the paper trading world of futures and derivatives, and the physical world where you actually have to deliver real bars and coins. And right now, those two worlds are telling very different stories about what silver is really worth. If you found this breakdown helpful and want to stay updated on these wild market moves, make sure to hit that like button and subscribe. Trust me, if silver keeps doing whatever it's doing right now, there will be plenty more chaos to discuss. Until next time, stay informed, stay skeptical, And maybe check if your local coin shop still has anything in stock.